Insurance has been a crazy thing for us here in Florida over the past couple of years. And in this episode, I'm going to bring on a very special guest. He's been with us before, but he is the expert in all things insurance. This is Kevin Koelemeyer with Regency Insurance Group, and we're going to get into what's going on, what's the current update in the market, in the insurance market, how we can save the most amount of money possible in insurance. This is going to be one that you're going to want to make sure you watch all the way to the end. Kevin, thank you for joining today. As I mentioned, Kevin is the man when it comes to insurance. Kevin and I met a very long time ago, actually in the insurance industry. And I don't know if he's the crazier one, but he's still in it. I obviously went into to real estate, but we've crossed paths a lot. Good friend of mine, and thank you for taking some time out of your busy schedule to talk with us today about all things insurance.
Yeah, appreciate it, Brad. And you're the only one I do this with, so just kudos to you to get me in front of a camera. It doesn't happen often, but always happy to jump on with you and talk about things that we could do to help. We're both after the same end goal, which is promote Florida. It's a great place to be. We both own homes here. We both have insurance here. So we have a lot in common in that regard. And it's great to come together to talk about how we can help mutual clients improve situations on both.
Yeah, that's awesome. And I agree with all of that. Now, in the past, and I've done several videos with you, I've done some videos on my own about it, but insurance has been a sore spot. I mean, let's call it like it is for a lot of the existing homeowners and a lot of the potential homeowners in the state of Florida. We've talked about how in the past there were a lot of carriers who sort of decided they were no longer going to write policies in Florida. Where do we stand now? Like, give me a state of the union when it comes to home insurance in the state of Florida.
Yeah, I think I would say this topic has aged us both personally and professionally over the last few years, through various claims, hurricanes, rate changes, clients having to maneuver the market via both our channels and navigate companies that have unfortunately left the space. I would go back when Regency launched in January of 2012. We probably had 30 some markets that we were running through. That number is significantly less, unfortunately. But on the positive note, and I do see a positive path forward here, we are seeing, I would say we're through the rough patch. There was some legislation that came out a couple of years ago that's making its way through the market. Initially, I wasn't as hopeful on it. I thought it left a little on the table, but it has made some solid changes for us. So we're starting to see new markets come into the play. Big thing I'm seeing, the major change, which was not something I anticipated, but it has been a very meaningful change, is we're seeing companies that are known as reciprocals come into the space. So what that basically means is it's owned theoretically by the policyholders, and it's helping alleviate the biggest benefit to what I'm seeing from it is it's helping alleviate, it's bringing some additional costs to the market and able to use those funds as a reinsurance mechanism versus, and they're still going out and buying reinsurance in the market, but reinsurance is the major cost driver on Florida home insurance for insurance companies. Right. So when you have a reciprocal and you have a sharing of risk, obviously insurance is a sharing of risk, but a more consumer-focused sharing of risk within those channels, they're able to bring some capital to the market that way, and not get as a high of return on that capital versus what a reinsurance market would want. So you're seeing more of those. Tower Hill led the way on that charge, but we've seen 4 or 5 additional reciprocals come into the space. So when you get those policies, you'll get some kind of on its face scary looking literature saying that you're a policy owner of this reciprocal. You have to sign a power of attorney to be part of that reciprocal, and some language about your rights as a policyholder. And it's on every reciprocal. That's normal. That's not a scary thing. But that's a big thing, and that's brought 4 or 5 additional companies to market that we desperately needed, right? Because if you're looking at anything in the economy, you need competition.
Yeah.
When you have 30 markets that go down to 5, which is what we were looking at a couple of years ago, Even if you're getting the best rate of those five, chances are that first place of the five is still quite a bit more of the first place of the 32. So
Sure. And when you're for clarification, when you talk about markets, you just mean available companies to write a policy in, write a home insurance policy in. Yeah.
actual insurance companies wanting to place policies in Florida.
Yeah. Okay.
That's really positive. Another positive thing we're seeing is, so you have Citizens. Citizens has always been known as the insurer of last resort, and that's what it's designed to be. Citizens has become the largest insurer in the state. They were a number of years ago after the hurricanes of 05, 06, 04, 05, 06. That's not a good thing for the state of Florida. The state of Florida is on the hook. So if a massive catastrophic event comes through, like an Ian, and Citizens is the largest carrier, that becomes a bailout situation, if you will, which will then, if probably a lot of folks don't remember, but if you look back at our declarations pages in 2010, we all had Citizens, basically a FIGA surcharge on these policies, and that was to help retool Citizens. Now, with the cost of property, the cost of homes, the cost of everything, if Citizens is on the major swing of a massive event, we're all going to be paying quite a bit more. So it's in all of our best interest to try to depopulate that. And in fact, we have within my own agency, we have 1,000 folks getting what's called a Citizens depopulation right now. So Citizens goes through their book of business and tries to push clients over to private markets, which is what we want. We don't want government insurance. So we're seeing a lot of that. We're seeing a lot to where Citizens is no longer the best option, if you will. Citizens have a lot of restrictions on their policy. They only do 100,000 liability. They don't have screen enclosure coverage. They only go up to 700,000. There's a lot of flood policy restrictions when you take out a Citizens policy, which inherently, it's kind of like inflation. If you're paying more to get less, even though your rate may still be similar to where you were before, you're now getting less. So we don't want that. We want to have wide options and coverage options and fully covered clients. We don't want a lot of policy restrictions and mandates that have to go along with that. So all good news. I'm feeling much better than I was 2 years ago. So thankful for that. We still want to be cognizant of assignment of benefits, which is where you have sign your contract or your policy rights over to a contractor. Unfortunately, that has helped cause a lot of the issues that we've been in. We're seeing Florida still being extremely litigious to where a claim goes to suits. We see commercials on it, billboards on it. At the end of the day, insurance companies are the one paying these claims. Insurance, as we discussed earlier, is a pooling of risk. So if we're seeing claims get paid out exponentially higher because of litigious nature, that's all coming back on us as consumers. So it's very important that you're cognizant of getting estimates, getting multiple estimates. Make sure that the claim is worthwhile. Always speak to your insurance company first. If you don't like the outcome, then you have options. But to not have that discussion first is not in your best interest.
So what I'm hearing you say is there are some positive signs. There's some positive signs of improvement in the market. And we certainly, it's not the ideal, we're not in the ideal end game spot of where we should be, right? We need more competition. We need those additional markets that come back and are incentivized to come back. And one of those factors, and you talked about the reinsurance, and I just want to make sure everybody understands what that is. Reinsurance is the insurance company getting their own insurance in case of a catastrophic loss. And the issue is, like, everybody gets upset if their premiums go up, and they're mad at the insurance company whose name is on the bill, right? Whose name is on the policy. And the reality is that they have a lot of costs, and they make money. I mean, insurance companies are in business to make money. There's no doubt about that. But the name that's not on that bill is the reinsurance company, and the reinsurance company is the driver of the majority of these costs because they're the ones who pay the largest percentage of when there's a massive catastrophic event. And that's what, like Lloyd's of London, that type of company is an example of that. And reinsurance is important.
That's their biggest cost driver.
Mhm.
is buying that access to capital. They buy it in layers. So if there's a catastrophic event, they hit layer one, then they hit layer two, and it's a pooled deal on the reinsurance side. That's their biggest cost driver. And when we say insurance companies are profitable, yes, but in fact, many weren't in the last 3 years, and they've lost hundreds and hundreds of millions of dollars, and that's what's pushed them out. That's if we look back, my largest partner in my agency was United Property and Casualty,
Mhm.
publicly traded, A-rated, exceptional. Had been working with them for back to my prior insurance office, going back to start my career in '06. These folks have been in Florida for 18 years. I look at Florida insurance as dog years, right? So you make it 18 years in Florida, that's like 100 years elsewhere, right?
Well, I mean, you look pretty good for aging in dog years. I gotta give it to you.
It's the makeup that you put on earlier. Um, but they got knocked out, and it was because of the litigious nature and the reinsurance costs, and that's unfortunately when you see items like that, that's what prevents investors from bringing new companies to the state.
Mhm.
So we have to get the litigious nature under control, and that's what that bill did 18, 24 months ago,
Mhm.
attempted to do, and is doing. I think there's still some room, but we need to get back to being an easier state to do business in, and that's unfortunate because this is a phenomenal state. We live here for a reason, but these issues that we're facing in the insurance market are pushing people out.
Sure, sure. Yeah, and we see that. I mean, at the end of the day, insurance cost is a cost of owning a home. I mean, that is, and so if you're looking at property from an investment perspective, that really hurts the return there. And you've got to do certain things where you have to charge additional rent as a landlord. If you're looking at it as buying a primary residence or a secondary residence, this is factored into your monthly costs, your annual costs. And so these are really big deals. And what I've always thought about insurance, and God love you for selling the product, is like, this is something that nobody wants, that they're forced to have, that they hope they never have to use, right? Like and it's intangible, right? It's not something that people necessarily want, but it's incredibly important to have. And in the majority of instances, they're forced to have, because if you have a mortgage, et cetera, like you've got to do that. So that all being said, the amount of increases, has that decreased? Has that declined a bit? Like, are we seeing things kind of leveling out from a premium perspective?
Yep. So I would say last 2 years, we were seeing 10 to 30%, I would say 20 to mid 30s, low 40s year over year for a couple of years there. Right.
Yeah.
So if we go back 12, 13, 14, I would say the average insurance premium in Florida, obviously there's so many factors, right? I mean, you have year of home, wind mitigation. We'll get into some of that. But for a new home, which is always going to have the best price because it's going to be the most current building codes. Insurance companies love new construction. But the average premium on a generic $400,000 home in 2012, 2013 was probably $1,200. That same situation is probably now in the low twos, okay, since 2012. Now, obviously, that's 10 years. We've seen inflation hit many, many markets. That's not terrible. We see the headlines, 30, 40% rate increase, big deal, but it's not necessarily as bad. But what happens is older homes that haven't been wind mitigated, older roofs, the underwriting criteria, not only have prices gone up, but the underwriting criteria are more strict than ever. So that becomes back into that competition phase, right? So if you have certain things that insurance companies aren't super happy about, your age of your roof, or frame construction maybe, or your distance to coast, or your distance to fire hydrant, different criterias within the home. So if you're out buying a new home, things that you need to be looking at, and I'll put a quick pause on that for a moment. That's why I applaud Brad so much as a realtor. He's actually my realtor, along with being a close friend. Is, to me, Brad goes above and beyond to look at the financial components of a transaction more so than he does the touchy feely stuff too. Hey, this is a great neighborhood. This is a great property. It's pretty. But he goes into let's take a look at the financial components. Let me get Kevin to get some bids to you on insurance before you go in and make this transaction. Brad's big on being upfront and not just, kind of things that can come around the backside, like an insurance cost. You're under contract, you got you've already made down payments, you got your mortgage lined up. Oh, wait, your insurance is $5,000 on this. Is that really a good fit for you? Brad will go into a transaction and get bids ahead of time. Hey, here's he'll shoot me a note on the way to a list to a buyer and say, hey, I'm going to show this house today. What does insurance look like? And I can have numbers back to him in minutes on potentially. It's not going to be exact because we still need some inspections and different things, but at least that person that's buying that transaction can have a full view on what they're looking at. So that ties back into being a little bit more of a tricky market than we used to see. It used to be.
Can I comment on that real quick before,
yeah, of course,
before you move on? So I appreciate you bringing that up. And what the big component in all of this is that we don't want surprises, right? And so we know what to look for in a home. And if there's something that we see that, hey, it's wood frame construction, or hey, this, is clearly in a bad flood zone, that is going to have a significant impact on the transaction. And I've heard too many horror stories over the years of people who don't find out about the insurance cost until they're already beyond their inspection period. They're already beyond their ability to cancel. And then they have this new whammy that comes up. And if they're getting a loan, typically the lender should want that information as soon as possible. But sometimes they're not. Like sometimes it's a cash deal and they don't think about insurance until it's getting closer to closing. Hey, I need to procure insurance. And then they come to find out they've got all of these massive issues. And so it's just, that is the way that we operate. We don't want, nobody wants surprises because they're always bad in a real estate transaction. Like surprises are no good. You're not, I've yet to find the, $10,000 that was hidden in a wall, like during an inspection. Like you don't get those kind of positive surprises. So that's a key component behind that. I wanted to talk a little bit about that, but go ahead.
So, and that's really, aside from rate change and companies entering and leaving the market, that has been the most interesting development in our industry. And if I go back to 2012, you would give it a zip code, you get a year of construction, and I could pretty much ballpark what your price would be within a few percent. Now we have elements of what's called single risk modeling. So algorithms, super fancy terms, a lot of technology behind the scenes.
Algorithms, I like that.
Yeah. That insurance companies are all using now. So you could literally have a home right next to each other and the rates could be dramatically different because of how the modeling is going on.
Previous claims and other things.
All kinds of things, right? So it's interesting because we launched Regency in 2012 with client zero from scratch, and we were players in the market from day one. Now, with everything being so analytically driven and the markets being so complicated, underwriting being so difficult, you really need now to make sure that your agent has their ducks in a row. We were talking off camera about what things can homeowners do to make sure they're getting the best coverage at the best rate and the best, you need a broker that's got their ducks in a row. You need a broker that has market capacity, has relationships with carriers that have been around, that are proven, that aren't necessarily just going to citizens. You need an agent that understands the underwriting components and the challenges, because I could show you a rate. It doesn't mean that rate's going to stick. It's like going to you see the lease for the Honda Civic for $99 a month, and you actually show up at the dealership, it's actually $400 a month, right? So we can show rate that looks really good on paper, but is it going to deliver on that number? And so that kind of ties back to when you're going to look how Brad handles his transactions. He gets numbers from multiple, rates from different partners of mine up front that he knows that I've vetted that is going to hold pretty true based on what we've seen in the market for that criteria of a home to hold pretty accurate when we get the inspections back. Obviously, it moves around. Inspections and underwriting is needs to be done, but not just showing a fluff number. We actually vet our numbers and put them out there. So that's one area that's really has changed in our industry. Is it's not just XYZ company owns the market share. It doesn't work that way anymore. It's much more complicated. It's kind of like getting a mortgage now is getting an insurance policy. So it's not, the clients need to understand that there is underwriting, there's hardcore underwriting going on nowadays. There's a lot of not a lot of inspection, but there's a couple inspections you need to have done, and you need to know going in that the old spreadsheet, if you will, of here's my zip code, here's my year. It's just not the case. There's a lot of mathematical equations going in behind the scenes, and the insurance companies are doing that. It's actually a benefit because the better your home is equipped, the better your scenario is equipped, the better. A lot of financial scoring involved now has proven to be beneficial to the folks that have their ducks in a row. It's going to be better for you long term, even though it's a little bit more difficult up front to get a policy. Those rates are going to hold more true, and those discounts are going to apply to the folks that are doing those things.
You had alluded to earlier some of the scenarios where the premiums were much more favorable, and one of those that you had talked about was new construction. It's something that I've talked about a lot in these videos, how new construction has benefited greatly recently because that's a huge factor, right? The insurance component. I mean, we can show a property that's brand new construction and maybe that premium is $1,700, $1,800 per year. And then if I go same price point for, I'll call it a used home, which is a resale property, that might be in a better location, right? It might be closer to the beach, but they could be looking at $5,000 to $6,000 to $7,000 a year in premium. And it's like, do I go new construction where nobody's lived in it before and I have these home warranties, or do I go with this one that's in a slightly better location and pay it a lot more in insurance? So what are some of those components? I mean, new construction, obviously newest codes, but what are some of those components that make the insurance costs as low as possible for us?
So, and that's a great point. On a little quick sideway on that is, you're married to that insurance, right? You're not necessarily married to that company. You're not married to that rate, but you're married to the characteristics that you're buying now. Your home's only going to get older as you own it. So if you're starting out with a policy, that rate's probably going to go up over time. Not just that carrier, but any carrier, because as homes get older, the roofs get older, the wearable items get older, rates don't typically go down over time. So that's a very important component of when you're looking at a property. It's knowing what you're walking into, and don't think that necessarily you're going to get better over time. It's your initial rate's probably going to be your best rate you're going to see on that property as costs of everything go up. The one thing that, so new homes just get massive credits right off the get-go. They get obviously you're up to the current codes. A lot of carriers will give new home purchase discounts, which is a discount that'll stay on for a few years and it starts to taper off. So you get a lot of those benefits. You get national builder discounts. But just being the fact that it's a new home is just, the analytics love it.
And logically thinking of it, it's like if there's a roof leak that happens in the first year, the builder is going to come in and fix whatever issue that is. It's not going to, it's not going to fall on the insurance company to solve anything in that situation.
Right. We can speak about, some of your personal stuff you've had. You've had a new roof put on and you saw a massive discount for that. So if you're in an older home, it's not end all be all. There's a lot of things you can do. And there's a lot of homes that still get very good pricing, even if they're aged out. The wind mitigation is still the largest driver of insurance costs in Florida. So your FBC credit, or your Florida Building Code equivalent roof, so a roof that's new or newer, is going to drive massive discounts, and also the size of the nail in the deck. So a new roof up to new code has a larger nail and they're spaced closer together. The building, I will applaud the state of Florida, and Miami-Dade really pushed this on strengthening building codes. That's and we saw it in Ian. Ian was a massive event, but a lot of the damage was done by flood. The newer homes did very well against the wind, and you can see it when you go down to the beach. You can see new home versus where an old home was, and the new building codes have just done a very nice job here, and we're blessed for that. And that's why you're going to see big discounts in price. I mean, that's the main reason, is you can see homes that withstood wind versus homes that did not. So the more you can get your home up to building code, efficiencies, the better your pricing is going to be. So the larger nails up in the roof, there's companies out there that do, and we've sent a lot of business their way, is thirdnail.net. They add, if you're on an older home and you have a single wrap or a clip up in the roof deck, you need to have 3 nails, 2 on one side, 1 on the opposite. And homes that were in the 80s or 70s, a lot of times did not have that 3rd nail, which you miss on a massive discount. So making sure your home has 3rd nail, getting updated inspections. If you're switching carriers, you need to have a new wind mitigation. You need to have a new 4-point. Going back to, it's not just discounts, it's having insurance companies that want to insure your property for that competition, right? We go back to, if you're the lowest of the 5 versus, not being the lowest of the 32, you still might have been in a better spot. So making your home as insurable as possible. So keeping, we see a lot of carriers just cancel for maintenance stuff, having mold on your siding, having tree limbs over your over the rooftop so insects can get up there or what have you.
Rodents, that's the problem. Yeah.
Maintaining your yard, showing that you have that you're a responsible homeowner. That shows the insurance company that, that means that maintenance is up to date, right? Water is
They'll
still
cancel a policy if somebody doesn't mow their grass? Like, that's what you're saying?
Oh, yeah. Yeah.
What?
Yeah.
That is mind-blowing. Okay. I mean, it is indicative. I mean, the saying, as the saying goes, like, how you do one thing is how you do everything. And so I guess like that's a sign to the insurance company, like, these people aren't taking care of their lawn. They're likely not going to be taking care of anything else.
And it's a pendulum, right? So we saw companies go out. The companies that are left, they have their guard up, right? So they don't want to be chosen for ulterior motives, right? So they have when the economy gets tough for everybody, everyone kind of, puts their shields up. So we're seeing it right now. As rates go up, companies leave, underwriting gets very, very tough because they don't want to be, picked against. They want to be picked because there's a lot of competition and they had the best product and price. They don't want to be picked because they were the only option. Okay.
Yeah.
So they're afraid that clients are just jumping ship just to get something, just to get in and file a claim. Okay. Mm-hmm. So they want to see that the homes are well maintained. If you have a junk all over your yard, there's a good chance that your plumbing's probably not the most taken care of, right? Yeah. Because you're not showing that care of ownership. So just making your home the best it can be to have a market is almost as good as a great wind mitigation right now. Having a 4-point that doesn't show, aluminum wiring or double taps in your circuit breaker, a lot of easy fixes, a water heater that's not 25 years old. That's a no-no. There's a good chance that's going to fail and cost the insurance companies thousands of dollars, and they're just not willing to take those risks right now. So, having a roof that's newer, they've really cracked down on roof age because that's unfortunately where a lot of the litigation went after water leaks and roof claims. So making sure that your home is the best it can be. You and I come to work to be the best version of ourselves. We want to make sure that our homes are still the best version of themselves if you want to try to find the best possible rate and or carrier.
It's really good advice. And location, I know it plays a factor in here as well, right? If you're coastal, that's going to significantly impact. If you can be a little farther away from the coast, and we saw that, like we saw that in person with Hurricane Ian, especially. And it's like coast really took a terrible hit, and then you go a few miles inland, and it's like within, sure there was a lot of trees and that type of stuff, but it was like within a few weeks, it was sort of like you didn't even know a storm happened. But at the coast, I mean, that's years. That's years for the coast to recover. So it makes sense why that's the case, but people like beach. And if you like beach, great. You just got to be willing to pay for it. That's what it comes down to. Yeah. Great. Well, this has been really educational for me, and I feel fairly connected to the insurance world, but I learned a lot of new things, especially around the reciprocal company and how that's working. So I really appreciate your time taking that with us. If people want to reach out to you for a quote on their property, or if they're purchasing a property, how would they do that?
Yep. So it's Kevin, Kevin, at Regency, REGENCYINS.com, Kevin at RegencyINS.com. Phone is 239-628-4344, 239-628-4344. Phone's 8:30 to 5, emails 24/7. I'm always on my phone as Brad, when he tries to take me out to dinner, I usually interrupt it with an email. So.
Validated. It's kind of annoying. He's like that guy who's on his phone, and I'll take responsibility. Maybe I'm not that interesting. Maybe I'm not that entertaining. I don't know, but yeah, that's a problem. Okay, awesome. Thank you very much, and really appreciate you all watching. Goal here is always to educate you, help you make the best decisions for yourself, for your livelihood here in the state of Florida. Make sure that you like the video, subscribe to the channel, and give Kevin some support for dedicating his time to help educate you as well. Thanks all.